The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the December 19th, the magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, well, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I'm absolutely grateful for your presence here. But more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on it at 877-927-6648. If you can't dial in, we've got you covered there too. You can always send me an email. For that, you would send to Steve at TFNN.com, and inside the subject heading, if you would be good enough to put radio show question. Of course, inside our Tiger's Den, any and every ping will do. So let's go ahead and get this show started. Right now, we've got all the U.S. indices trading to the downside. Dow's off 21 points. S&P's down 21 as well. So basically about flat for the Dow and 0.5% for the S&P. 1 1/10% for the NASDAQ 100 or 130 points. 1 4/10 for the semis, that's 37. The Russell's off 0.8 or 14 points. Gold's trading down $7. Silver's off 28 cents. Light sweet crude is flat. Natural gas off 55 pennies and a 30-year Treasury. Trade out at 129.16. That's off 1 point and 21/30 seconds. To the upside, leading the charge, dollar-wise, you've got Madrigal Pharmaceuticals up $159. That's 250%. Mercado Libre, 4%, $36. Shockwave Medical up 6%, $12 and change. O'Reilly Automotive about $10, a little over 1%. McKesson Corp up 2%, $7.60. To the downside, it is Monolithic Power Systems off 17 or $18, nearly 5%. Cosmos Health off 59%, that's $14. BlackRock is down about $12, 1 7/10%. Albemarle down 5% or $11. Lithium Motors down about $10, that's about 5% move to the downside. So we got plenty to look at. Of course, I want to look at what you want to look at. We've got no request at the moment, so let's just simply go to the general markets. When we take a look at the general markets, what do we have out here? We've got consolidation breakdown levels. Now, the Russell 2000 appears to be joining in on that cause. A close today, I would say, below 1778 will give it a consolidation measured move. Let's just simply go ahead and copy and paste this out here. This way we can give you a potential downside measured move price target. That would take us into the 1630-ish area out there. And 1630, if in fact price gets back there, is going to go ahead and get us back into the June lows out here. That's June 16. If we take a look at the ES Mini out here, its initial price target is in about the 3750-ish area. Inside the NQ, it's around 10,920 or so. Inside the Dow, the Dow is around 32.5. Just giving you some very ballpark price figures for where these equity consolidation breakdowns should take price to. So that's what's going on. We take a look at the daily time frame. Let's not stop there. Let's simply continue to go take a look at the NQ charts out here. We'll put up our multi-time frame set of screens. And here over on the left-hand side, you see the daily. But before we go any further, what we'd like to understand is, what does market breadth look like for the NQ out there? Great question. The answer is it's mixed bag. On the 60-minute time frame, you have a bullish crossover. On the 4-hour, bearish crossover. The daily, perhaps most important, is the bearish crossover there. What I mean by bearish crossover is, as we speak at 11:10 in the morning, there are 12 instruments, or about 12%, that are trading above the top of the daily profile, whereas there's 50 instruments. Half of the instruments inside the index 100 are trading below profile. That puts pressure, selling pressure, inside the market, and that says that most rallies will be sold. Now, on a 60-minute time frame, if price is going to go ahead, or if the market is going to go ahead and make a bottom, you'll see those bottoms typically form on the intraday charts first. Well, on a 60-minute time frame chart, you've got 32 above, 22 below profile out there, so it is bullish in from a market breadth standpoint. But I think the daily is the one that is more important to you and I. If we take a look at the S&P 500, the S&P 500 looks pretty trash. It's bearish for 60, 240 daily. The weekly time frame still has a bullish crossover, meaning there's 130 instruments trading above the top of the profile, 97 trading below. So the S&P right now, daily, 4-hour, 1-hour charts do not look as strong. And I'm not saying that the NASDAQ looks strong. It's just simply NASDAQ 100, that is, stronger than the ES Mini or the S&P 500. If we take a look at the rest of the charts out here, now it's 11:12. The 5-hour time frame bar does not complete until 2 p.m. But right now, price is negating a TD9 count bottom. That says on a 5-hour time frame chart that price wants lower price. That lower price would go target the lows from back in November the 6th area out there. So that's what that would tell us, as long as if we get a close at 2 o'clock that is below 11,282.25. That'll simply negate the TD9 count pattern. On a 4-hour time frame chart, no bottom signal. There is a Rhodes momentum indicator signal that's been triggered, I should say, for the 2-hour, the 4-hour, the 1-hour, the 30-minute chart out there, and the 10-minute time frame chart. Each of those need bullish reversal candles to confirm that bottom pattern. And then what you'd be looking at would be their oscillator and change line, their respective oscillator and change lines, and any profile levels. Those would be the battlegrounds for any move higher out there. So to summarize the NQ, the NQ has a consolidation measured move breakdown. That should take us back into the October and November lows out there. You're negating or appears to be negating a TD9 count bottom on the 5-hour time frame chart. We don't have any other bottoms. Well, I take that back. The 30-minute chart is forming bar number 9 of a TD9 count out there. So looks like that pattern will complete, meaning that are confirmed by 11:30, and by 12 noon you will get a completed TD9 count bottom pattern. That should take price up to the 313 area. If that pattern fails, and I mean fails like right away within an hour or so, that's going to tell you about a strong momentum move to the downside. Let us not forget, any of these bounces at this stage here are just that. They are just bounces out here. We've got measured move consolidation breakdowns, and the only thing that is of concern, or the only couple things that would be of concern, I would say would be the U.S. dollar index and the spot volatility index. If those things actually line up, then that'll tell us about markets that could really scream to the downside. Now, when Stevie says line up, what the Sam heck are you referring to? Well, if we just simply take a look at the U.S. dollar index out here, what you'll notice is that ever since the time frame of October 19th, October 19th was the last time we saw the spot volatility, or the U.S. dollar index close above the top of a daily profile. So even though we've got that nice buy the D point pattern here, the real proof in the pitting would be a close above 104.67. If we get that, then the S&P 500 should most definitely hit the bottom of that consolidation and perhaps head lower. 104.67, that's the key level to be watching inside of the U.S. dollar index. Steve Rhodes with TFNN. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we've got a question. We were taking a look at the NQ before we went to that breakout there. The specific question was from Dennis G. His question is, where is support for the QQQ series ETF? Of course, Dennis, you know I prefer to make those decisions off the NQ, but we're going to go take a look at the QQQs for you and answer that question specifically, which would be taking a look at the weekly time frame chart. The weekly time frame chart shows, that's the center panel that we're looking at here, shows that prices pulling back, these are the Qs, trading into its bullish structured weekly profile. So the support range, because it's bullish in structure, is going to be between the bottom and the center of that profile. It's anywhere between 265.62 and 271.31. So price right now is trading into that range. But we've got that consolidation measured move pattern inside of the NQs out there, inside of the Qs themselves. That suggests, and price right now is also pulling back into that swing point. Has not hit it just yet. It would hit it when it gets down to 270.17. The low so far is 270.43. That swing point out there has volume in the range of 112 million shares. You're pulling back right now with 13 million shares, so lighter volume. But that is your support area. Now, what I should also point out to you, you asked that good question, where's the support area? Well, you should also realize, what everybody should realize, if you are a to B equals CD pattern person, and I know there's at least one inside the Tiger's Den because his call line sign is A to B and C to D. Well, A to B and C to D, you've probably identified that the Qs themselves have a confirmed monthly A to B equals CD to the downside. What the Sam heck are you talking about, Steve-O? Well, if we take a look at the B point of an A to B equals CD to the downside for the Qs, that would be the June area. And the low in June inside the Qs was 269.28. And the volume that it generated during June was 1.4 billion, 1359. Well, it turns out that in the month of September, price closed below that low, and it did it with 1.37 million shares. It did it with more volume. Therefore, what the Qs have generated is a confirmed monthly A to B equals CD to the downside with an initial price projection. And the reason I say initial price projection is because that would just be the 1-to-1 price target area. And that would take us back to 194.99. Now, the retracement here, that B to C leg was only 46%. That is a fairly weak retracement. Typically, retracements that are less than 0.618 on that B to C leg will not always, but typically will turn into a expanded C to D leg. Well, the expansion, or the 1.272 expansion that is, would take us down to 157.07. What we can also see here with regard to the QQQs is that they are trading with inside their descending price channel. Only at close above that price channel would that suggest that maybe we have a change in trend. We don't have that as we speak. And in fact, if the Qs on a weekly basis close below the 265.62, most certainly that would suggest a test of the swing low from October out there. That swing low on a weekly basis was the week that began October 10th, and that low, 254.26. Price could take that out easily and make its way down to the bottom of the descending price channel. So to summarize, the answer to the question, where is support on the QQQs? There is none on the daily basis from the standpoint that price is below profile levels and below its oscillator and change line. That takes us back to the weekly time frame, and that would be the bullish structured area, 265.62 to 271.31. So, Dennis, I hope that helps answer your question with regard to the Qs. Thanks so much for the request out there, and have a magical Monday. Dan says, sadly, as a long bias investor, I've noted many across the market, Steve-O, many A to B equals CD to the downs out there that were completed on a monthly basis. Cool, thanks. Okay, so let's see if we've got any questions here, any questions that have come in by email, so I can most certainly get to that. Looks like the answer to that is no. Not a single question. I don't believe there's anything inside the Tiger's Den. Let me just take a quick peek out here. I don't see it. So if there was a question, please go ahead and type that back in. Oh, S&P has a question, I believe. Good morning. Can we look at CF? Okay, so let's take a look at CF. Let me get that fired actually up on my black background screen, since that's where we're at right now. I will do the same on the white background screen just to see if there's anything else there. This is CF Industries, by the way, and S&P was just simply asking if we could take a look at it. Well, we've taken a look at it. I'm done. Just kidding out there. Here's what we know. On a daily basis, there is a new profile that is attempting to form, the bottom of which is at 93.57. Prices trade at 93.30. First day, bullish in structure. My goodness, if you close below that 93.57 mark out there, that would certainly be a bearish signal. Last week, price closed below the bottom of the weekly profile. It's trading into a swing point that had volume of 14 million shares. On last Friday, that volume was nearly 16 million shares. So price is pushing into a swing point with volume. So that would suggest to us, S&P, that at least that low should be tagged and tested, and that low being $90.25 out there. If price is able to close below that, then what you might get is an A to B equals CD to the downside. If we take a look at what that looks like here on the whoops. Let's try that again. Let's take a look at what that A to B equals CD pattern could look like. It does not look at it right now, like this right now, because the B point has not been passed. Okay, Stevie, why is that not working? Oh, I see why. Because I went to the wrong space. My goodness gracious. Okay, now let's draw that A to B equals CD pattern out here. We've got the A point, the B point. The C is going to be that retracement into the high of November, the week of November 7th. 1-to-1 would get us into the 83.09 area. 1.272 would get us down to about 75.11. So we are looking at CF Industries. It looks like it wants lower price. It's trading into a daily swing point. The daily swing point has volume of 2.7 million shares, only 470 today. So you are pushing that swing point with lighter volume out there. That doesn't mean that we won't get lower price. You are trading below the bottom of that daily profile. And you are very welcome. Thank you for taking the time to write in. That was S&P inside our Tiger's Den. Steve, sound check, please. No sound from Steve here. Just your system. Duncan, Steve, you're the only one so far to note that. So, perfect. So it's your system. Okay, excellent. So we'll let you resolve that. So no other questions that I see at this stage here. So let's take a quick peek and see what is going on, and then we can come back and figure out what to look at. What do we want to look at? So we looked at the dollar. Oh, there was some chatter inside the Tiger's Den. And I think some of that chatter or confusion, may be coming from Steve-O. And so I want to clear that up. I did get an email earlier that I responded to, and that was this. The question was, hey, Stevie, things seem to be broken. What was being referred to, so let me actually get back there and do that. What was being referred to is the fact that the spot volatility index is still below the 50-day exponential moving average. That's that bottom panel. 50-day currently is at 23.87. Spot is currently trading at 21.79. And we've seen a market that has moved lower. In fact, we saw that consolidation measured move. And so the question was, is this broken? Well, real quickly here, I'll get to the chart. What we will see is that we can see a rising spot volatility index. That's the bottom right. That's the right-hand panel chart out there. So we've had that actually moving higher, along with the S&P moving lower. So it's really doing what it's supposed to do. It just hasn't broken through the 50-day. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Right now we've got the Dow. What is the Dow doing? Well, the Dow is trading out at 32,893. That's up 27 points. S&P's down 19. Nasdaq 100 is up 121. So we were taking a look at a chart before I went to the break. Let me just make sure that I properly communicate to you what this chart, these charts here are doing. This is a correlation tool that I'm using. The correlation, the chart on the left is looking at the ES mini and the US dollar index. The chart on the right is looking at the ES mini and the spot volatility index. The bars on the bottom, bars that are below zero threshold, tell you there's an inverse correlation. Now, I'm just looking at a 5-day average out here. I could increase that. I think if I increase it, we're going to see more of a directional correlation or an inverse directional correlation. The bars below zero, an inverse bars above zero tells you that they move in the same direction. This is the average over a 5-day period. So that's what this chart does. Now, if you take a look at, again, on the right-hand panel, you can see the spot volatilics made a low out here. It was on the trading day of December the 2nd. And we have seen price moving higher, the spot volatilics, that is, since then. The actual high that's of importance out here for the S&P, it was on December the 1st out there, and price has been moving lower. So from a directional standpoint, everything is in sync. If we take a look at what's going on for the U.S. dollar index, that's the bottom panel of the left-hand side chart. We can see that that had a top out here on September 28th. Prices have been moving lower since then. And with regard to the S&P 500, it basically has been moving higher since then as well. So overall, nothing unusual here, other than just simply the mere fact that price in the spot volatilics has not gotten back above the 50-day exponential moving average. The reason why that is important, or at least why we take a look at that, is really because if you take a look at the summary over time, which this is what this chart does, this is the S&P 500 up top, spot volatilics below, and then the green boxes are time periods when the spot volatilics below its 50-day exponential moving average. That usually leads to a move sideways to higher. And then the yellow boxes represent those time periods when that spot volatilics is above the 50-day exponential moving average and price moves sideways to lower out there. And that is certainly the pattern that we have in here since the spot volatilics dropped back below the 50-day exponential moving average back right around October the 25th. So I hope that that clears things up just a tad. If it doesn't, I've confused you even further, well, then I did not accomplish my job out there. And if that's the case, then write back to me, and we'll try to figure out how I can properly communicate what at least I see with regard to the spot VIX, the dollar, and the S&P 500. Nicholas writes in. He says, good morning, Steve. Would you please go over Apple for possible entry? Thank you. Have a great day. So let's, in fact, do that out here. Let's go take a look at Apple. Oh, I tell you what. Let's, well, let me see here. Give me a moment, if you'd be kind enough to. Yeah, so Apple, AAPL. So Apple right now, we're on the black background? We are. So let's go take a look at the black background charts, because what's going on as we speak right now, Nicholas, is prices testing Apple's June lows. So, and I believe it's doing it with much lighter volume, but it has not rejected those lows, or it most certainly did not reject those lows when I was taking a look at it. So now let's go take a look at AAPL. Let's look at the daily time frame. I'm going to simply expand out the chart here. Let me turn off these trend line that are automatically drawn in here. Price is trading below those trend lines. And now, in fact, let's go take a look at that swing low where price is trading towards. That swing low is from the trading session of June the 16th. And that's at the 129.04 level. Now, on June the 16th, Apple made a low with volume of 107 million shares. You're at about 30 million shares right now with 2 hours of trading. If we just multiply that times 3, that's going to get us to about 75, about 80 million or so. So price is pulling back into that swing point with light volume. But if price closes below 132.39, and you're 131.85 right now, even if it closes in that swing point with light volume, price may still get down and test that level out. That's at 129. Heck, for all we know, it could actually blow that level out. So that's what's going on. We take a look at the daily time frame. Prices all the way back to the June area. You may remember when we took a look at the Qs out there for Dennis, and we looked at the consolidation measured move and so forth. That took us back into the June time frame as well. Let's go switch panels out here. What I mean by that is let's go switch screens, take a look at those white background charts, see if there's anything additional out here to report on for Nicholas. And the answer is no, there is not. Price is moving lower. It's doing with less relative energy on the daily time frame. The weekly time frame, price is making its way back to the bottom of its descending price channel. As far as where that is priced out, it's about 124 and change out there. On a monthly basis, what Apple is doing is trading below profile. That suggests a close below 140.48. Could take us back to its breakout area. That's at 123.13. So, Nicholas, we've taken a look at this. I know you are looking for an entry point. Stevie does not see one for you as we speak. A bullish reversal candle on a daily time frame would generate a Rhodes momentum indicator bottom. We don't have anything to indicate that that is a pattern that's in play as we speak. So I hope that helps you out. thanks so much for taking the time to write in. We had another request that came inside the Tiger's Den. That was from Dan, who wants to take a look at Nike. Nike, as he says, is out with earnings after the bell tomorrow. Is it? You didn't say. You said earnings tomorrow. So I assume it's not after the bell today, so it's most likely after the bell tomorrow. So the question is, what is Nike doing? Dan Sean asking, in essence, the question, can we find a tell out here? Well, what I can tell you is that as we speak right now, Apple is trading below its TD9 count, Nike is trading below its TD9 count breakout area. And that was at 103.84. Price right now, 103.66. The volume with regard to today's candle session inside of Nike currently has generated volume on a daily basis of about 3.6 million shares. Now that 3.6 million shares is doing what? Well, the candle that it's dealing with, where it's taking out the lows out there, that had volume of about 5.3 million. You're already 3.5. So you've got Apple moving lower with volume. Move lower to where? Excellent question. We can see a nice TD9 count top that could form this week, but in order for that to form, Apple's going to actually have to rally. In order to form, price would need to close above 105.96. Way too early to say whether that is going to take place or not. What we do know is that Apple made its way up and it ran into resistance at its TD9 count breakdown resistance level. That's at 113.73. So what this suggests to Stevie, what this suggests to each of you as well, because we have a brand new profile that formed, price is likely going to go tag or target the bottom of that profile. And for Nike, Dan, that's in the 101.35 level. There's additional support, and that's at 97.63 or 97 and change, because that number and that change, that 63 cents, are going to change as price moves up and down. On a monthly time frame, we've got a nice monthly TD9 count bottom out there. So that looks good. So what do we have as far as mixed messages? TD9 count on the monthly, still in place out there. Price is below the support of its profile. So no reason why price can't go back and test those lows. The daily time frame, a close below 103.84 is going to suggest that price wants to move lower. You've got price running into resistance on the weekly, and that's at the TD9 count breakdown area. So that suggests to move lower as well. And that move lower would be 101.35 or 97.62. So Dano, I hope that helps you out with regard to Nike. Thanks, Stephen. As often as the case, we're pretty much in sync. You were looking at the 99 to 97 zone. 97.61 is the weekly oscillator unchanged line. Steve Rhodes with TFNN. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're taking a look at the stock for Moderna out here. mRNA is the ticker symbol. The question was just to take a look at it. What Moderna did on Friday was it confirmed a Rhodes Momentum Indicator top. It did that when it generated that bearish three-river evening star because there was a Rhodes Momentum Indicator signal that had been triggered. So the first thing to know, S&P, is that you've got a confirmed top. Prices below the green oscillator and change line. A close today below 194.91. Will suggest a move to 179.12. 179.12 is the bottom of the daily profile. The weekly time frame shows a TD9 count top that confirmed last week will complete this week. That suggests that over time, price will want to go take a run for its oscillator and change line that's currently printed about 162 and change out there. So I'd say the 162 area would be where price on a longer term basis is likely to head. On the monthly time frame, what we have out here is a TD9 count bottom. Price did what it was supposed to do, which was tested and rejected at this stage. It's green oscillator and change line. So the work to the upside for Moderna, because of its monthly TD9 count pattern, is done. What you should see here is Moderna pull back to test support. And that's again at 179.12 on the daily time frame. It is 167.55 on the weekly time frame. No, I take that back. The weekly time frame, the level of support would be 188.65. Price is trading above the top of its weekly profile. So it closed below 185.65, ought to take us back to the 179.12 area, and we could see further moves lower. With regard to, I don't see anything else out here that is going to help you, S&P. So I hope that does help with regard to Moderna and what Stevie is looking at in the stock chart. So have a magnificent Monday, and thanks so much for taking the time to write in. We've got another request out here. This one is coming in from Hector and the fuel injectors. Hector writes in and says, SWAV, S-W-A-V, buy the D point on this weekly A to B equals CD to the downside. Is that what the stock charts are telling us? Let's go take a look at the SWAV one, S-W-A-V. And for that, I believe I'm just simply going to go ahead and turn back to the black background charts. The A to B equals CD patterns are much easier to follow there. So if you give me a moment, we'll change screens, and we have that back up and running. So the A to B equals CD pattern out here that I show has not completed. In order for that to complete, price would need to get down to the 184 level and, of course, generate a bullish reversal candle. That is not what we have with regard to today's price action, Friday's price action, and Thursday of last week. So as we take a look at SWAV, S-W-A-V, geez Louise, Stevie, S-W-A-V. I was trying to type it on my other screen and totally butchered that one. So I'm just looking to see if there's any other kind of signals out here. So to buy the D point, you said on a weekly basis. The weekly basis probably should be this, well, probably is likely the same A to B equals CD pattern. Here for the 8 point. 8 points easy. Easy peasy. That's going to be the high of the pattern out here. Well, the high of the pattern on a weekly basis is going to be October 24th. And the low is going to be the low for the week of November 14th. And then that high, that was made with 637,000 shares out there. 319 million shares on December the, what am I doing? Stevie. Holy cow. I was way off. I was looking at the wrong numbers out there. So back to Shockwave. Here, do I have the correct symbol? SWAV? Yeah, is that what was requested? Yeah, that is from Hector. SWAV is what he's looking at. So Hector, I have a confirmed sell the D point pattern. The B point on a daily basis was the November 14th low. That had volume of 637,000 shares. That was passed with 683,000 on December the 12th. So your 1-to-1 A to B equals CD to the downside will get you down to the 184 level. Again, on that weekly time frame out here, the A to B equals CD pattern gets us down to that same 184. So those are the swing points that I would use in drawing my A to B equals CD pattern. It does not suggest that you back up your truck just yet. That may be the case as price gets to that 184 level. We will just have to come back and make sure of that. So Hector and Patty, thanks so much for taking the time to write in. I hope that helps you out with regard to the A to B equals CD patterns for Schwab, and have a magical Monday. Any other questions out here? I don't believe so. Let me just, no, not there. Okay, so with no other questions, or at least any by email, and I don't see, can you look at pins? No position yet. That's from Fletch. We most certainly can. So PINS, which I believe is Pinterest out there. So let's go take a look at Pinterest, see what it is doing. PINS, again, is the ticker symbol. It's trading out at the level of about, looks like 24.53. Is that correct? 24.53. Going to find out here in a moment. So right now what I see is a sideways consolidation with regard to Pinterest. PINS is the ticker symbol. And price right now is within inside its daily profile. And the range out there is between 23.72 and 26.37. So I see a consolidation that way. I really see a consolidation on the weekly time frames out here. You do have a new profile that has formed. This profile, there's a slight bullish bias to it from the standpoint that the current profile formed above the prior profile. The prior profile formed above the prior profile. That's a bullish directional trend out there. And that would be the case as long as price remains above, closes above 21.20. No topping pattern or signal out here. This does suggest that over time, if price can in fact take out, that means close above 25.80, that you should see a move up to the 36.95 zone. So you've got a consolidation on the daily, a consolidation really on the weekly, and you certainly have that on the monthly. The top of its profile is acting as resistance, the top of the monthly profile that is, and that's at 26.55. So with regard to Pinterest out there, what does I see just really a lot of consolidation out there, Fletch. No position yet. If you're looking to get into that, then what you'd probably prefer to do is wait for price to get down to the bottom of the consolidation. And I would say fire away around the 21.02, 22.02 level out there. I hope that takes you out. Thanks so much for being so kind to wait for that for me to take a look at it. So no other requests that I see so far. We've got about a minute to go. Let me just check, make sure I don't have anything on the phone, on the line. Pat writes in, he says, SLV, please. So let's go take a look at silver. SLV is the ticker symbol that we're going to utilize. Let's see if this can populate before we go to a break. So SLV. So what SLV has is does not have a confirmed Rhodes momentum indicator top. The equity future contract does. And right now what you've got is you have price consolidated with inside its daily profile. That is the SLV. That's between the range of 21.04 and 22.01. You have a TD9 count that confirmed on last week for the weekly time frame will complete this week. That suggests over time Price moves back towards 1947. And price finding resistance, the SLB that is, at the top of its weekly profile, 2142. Monthly profile, that is, at 2142. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Back, folks, we got the Dow down about 73 points. S&P's up 24. NASDAQ 100, 129 points to the downside out there. I am showing the SLB charts. My apology. When we were talking about the SLB, I had accidentally had the black background charts up on the screen. So there's your daily, your weekly, and your monthly time frame. Again, nothing has changed there. There's a question inside the Tiger's Den. I believe there was oh, no, I take that back. There's one that came in from, I'm not sure who it came in from, but the question is, Steve, aloha. That's perfect. That's all Stevie needs to know. It's from someone in Hawaii. Got to love that. Any Santa rally. So that is a great question out here. And to answer that question, let's do this. Let me fire up, see where I'm at. Okay, on that background. Popular instruments. Let me put up the S&P 500. There we go. And let's move over here. And what we're going to do is just take a look at our seasonal set of charts out here. So if we go back, we can go back as far as 72 years for the S&P 500. Let's show you where today's date is. And the more is, what if we were to just take a look at years that end in 2? How about years that end in 2? I should have had this already done. So That's going to be relatively easy. You got 1962. Do we have 1952? We do. Do we have 1972? We do. How about 82? Let's get 82. Let's get 92 and 2002. Give me a second here. 2002, 2012. And then lastly, we can take a look at 2022 out there. Not really going to change a whole lot, I wouldn't imagine. And so what we can see, let me take 2022 out of there. What you can see here with regard to the Santa Claus rally, if we do get one, it shouldn't be much. Can you make the case of a slight move up through the end of the year, through the early part of January? Absolutely. But pay attention to this chart out here from Hawaii. And know that even if we do get a Santa Claus rally, doesn't look like it's going to be anything really that great. Folks, stay tuned. We've got great programming lined up. I'll be back with you on Terrific Tuesday. Please have a magical and magnificent Monday. Take care, folks.